I'm not doing Twitter for the money. It's not like I'm trying to buy some yacht and I can't afford it. I don't own any boats, but I think it's important that people have a maximally trusted and inclusive means of exchanging ideas, and that it should be as trusted and transparent as possible.
Musk is currently being investigated by federal authorities. They don't list which federal authority.
All eyes have been on Elon Musk's interest in buying Twitter, and it seems he's finally making the deal. The acquisition is important because Twitter has been the launchpad for many cryptocurrency swings. Cathie Wood, former CEO of ARK Investments, talks about inflation and Elon Musk, Tesla, and why her gamble on innovative companies that emerged in 2020. Welcome to Wealth Supremacy, where you get all the latest news on cryptos and the economy. First, let's hear Cathie Wood talk about inflation, which is still high.
Well, we agreed that if inflation and interest rates took off, that would be a problem for high valuation stocks. But I do think what is happening now, we saw a dry run of it before COVID. So if you remember before COVID, as we realized what a problem we had on our hands, the globe had. I think the markets were down in 1 month's time, 25%. We were down 46%. From those lows, as you just said, we from April 20 to 21, 350, 360%. Since then, just to keep the keep the perspective here, down 75% at our low in May. Now we're probably testing it today as we speak, so we shall see. I think one of the things that has happened is during risk-off periods, we see a rush back into indexes. Even so, a lot of the market's gone passive, but when we move into risk-off, this idea of career risk, business risk surfaces in discussions, and there's a movement back into benchmark stocks. We don't own the big benchmark stocks. Only one of our stocks has made it into the benchmarks, and that's Tesla. And believe it or not, Tesla's held up better than our portfolios.
The Federal Reserve have found out itself as the rope being pulled back and forth in a tug-of-war between economists who are clamoring for more tightening and those who are calling for more easing. Cathie Wood is on the latter team. She has been calling on the Fed for a while now to start easing on the interest rates. She wants to see more stimulation in the economy and does not agree that inflation is still a concern. As it is now, there are pointers that the economy may land in a recession if the Fed should continue to tighten. Jeffrey Sherman, who's a deputy chief investment officer at Double Line Funds Management, says everyone in the financial industry are scared an over-tightening could happen, leading to a hard landing. So far, the Fed has increased interest rates by a total of 2.2%. Financial commentator and founder of Bridgewater Associates, Ray Dalio, commented in a recent post that increasing rates to about 4.5% could send stocks down by as much as 20%. For now, we might not have much to fear, as the Fed's target is 2.5%. But there's no guarantees because the Fed chair, Jerome Powell, has said he would continue relentlessly until inflation is brought down. Are we at risk of entering a recession because the Fed increased rates too high? Cathie Wood revealed that Tesla stocks has been the best investment her assets management company ARK Invest has bought so far. Tesla has remained defiant in all circumstances. In 2021, the company debuted on the S&P 500 at number 392, which was remarkable. Profits of the company have continued to grow, reaching a 71% growth last year. The company is one of the few defying the downturns in the stock market.
So I think there's been a lot of algorithmic trading. I felt it pre-COVID. The variables algorithms focused on cash burn, cash cushion. And yet at the time we were saying, wait a minute, this makes no sense. This is COVID, and we need to solve this problem. Innovation solves problems. And so that was one of the reasons we had that swoosh, right? We were solving problems, global digitalization, figuring out how we sequence the coronavirus and so forth. I think the same thing now. We've had this incredible decline. We have so many more problems now. Supply chain, Russia's invasion of Ukraine. Innovation solves problems, and yet these algorithms and very short-term time horizons. Ours is 5 years. The market in risk-off goes to 1 quarter. Algorithms are dominating the market. It's very interesting. Most people don't know what our companies do. and they don't know the kinds of problems they are solving. But as we've gone through this period, this 75% decline, we've concentrated from 58 names to 33 names, to our highest conviction names. Typically, that's a very good strategy for the turn in the market.
Not everyone thinks Cathie Wood knows what she's doing or talking about. One of her critics, Michael Burry, has pointed out that Cathie Wood's ARK stock was bound to collapse from the onset. Cathie Wood had betted big in 2020 on companies she believed were the future, because they were creating innovations that solve today's problems. Unfortunately, ARK's ETFs have been failing terribly. She explains that this is because there's a lot of algorithmic trading going on. Actual people are not looking at the potentials of the companies behind the stocks they're trading. After a good 2020 of ARK stocks going from $38 to $160 with a year in 2020 to 2021, it has been one of the hardest hits this year, going down 63% and causing Cathie Wood to resign. According to Forbes, the companies that perform best in the lockdown are the ones failing now. Stocks like Teladoc Health, TDOC, Zoom Video Communications, ZM, and Peloton Interactive, PTON, have fallen by at least 80% from their 2020 peak. Some say it is because these companies benefited from investment by people who had received stimulus checks from the government, and these were the popular companies at the time. This claim has also been attributed to the boom enjoyed by the cryptocurrency market, but with current economic situations, these new investors are selling off en masse.
Do you want to see Elon Musk buy Twitter, or are you worried that if he does, it'll be way too much of a distraction for other companies you do care about, like Tesla, for example, and SpaceX?
I'm excited to see what he does and how he open sources the whole thing. I think he's going to change the model completely.
And the risks that people cite?
Well, we've watched him, how he's our Renaissance sounds man. You know, SpaceX, boring, Tesla, of course, and you know, I think he's been able to not only multitask, but actually he's doing these things because he wants to protect us from ourselves in terms of the environment, and also wants to prevent censorship in the case of Twitter, and open source and take the bias out. And I love that.
If you enjoyed this video, please click the like button and subscribe to the channel. Hope to see you again.